Now, what is the view emerging on Hyundai? To speak more on that, I'm joined now by Pramod Amthe, Head of Institutional Equity Research at Incred Capital. Pramod, thank you so much for speaking with us. Now, before I get to your take on Hyundai in the space, let me start by asking you about these concerns that an IPO of this size will suck out some liquidity from the market. There are differing opinions on that. Was wondering what you think.
I think you have to see in the context that, as you rightly said, it's the largest IPO, but the industry is definitely going through some amount of consolidation. And it's not just the car industry where the IPO is placed, but the broader auto space itself is having a very, very selective volume growth. So in that background, getting such a large value IPO becomes a challenging when you have priced it for perfection. So those are the context of the industry slowdown versus the company's proposition, which is trying to defend its number two position versus the competition, which is trying to fight out with new models. Whereas Hyundai has a very strong pedigree of global parent and seems to be better future ready. But if you look at even Hyundai's performance in terms of volume, it has been relatively underperforming the industry. So in that context, it looks like a price for perfection and may not be giving any immediate returns post the listing.
So in terms of pricing, you're saying it's priced to perfection, 1865 to 1960 is the price band. Give us a sense, Pramod, of how you see it compared to its peers, how you see Hyundai compared to its peers right now.
So if you look at the broadly in terms of fundamentals, it has a unique proposition in the medium-term investment opportunity in the under-penetrated car industry in the overall automobile space. It has a better product mix in terms of exports and SUV. And as I said, it's a better future ready with a relatively stronger parent coming from Korea. The third point is basically, in spite of a lower scale of operation, has a marginal better EBIT profitability, in spite of being inferior, I would say, like a gross margin or warranty cost or net working capital. Having said that, those are the fundamentals which play out. But the key point to note out is also what's happening in the marketplace. As I clearly indicated to you, last couple of months, the slowdown has only accelerated for the car industry. There clearly, Hyundai seems to be underperforming. So they need to fix up the new product launches, which has been favoring some of the competition. So that is very essential. We need to look forward for what is the new product plan for this to recover as they go forward in the second half of next year. Coming to the valuation, when we look at the pure car play, which is Maruti, it's almost on par on a forward PE basis and a sharp premium on a price to book basis because they withdrawn a large amount of dividend last year. It's almost like a 200% premium on price to book. The only advantage they have is on EV EBITDA basis, where there is a discount on 20%. So in that context, if you look at some of the concerns of high related party transactions and the struggle for number two position, whether it will sustain, we feel the IPO is priced for perfection and limited room. So within the overall car space, our preference will be for Maruti over any of the other car peers, either it's Mahindra or to that extent even Tata Motors.
Right, Pramod, well, let's talk about the outlook. You've already talked to us about the valuations and how you do feel like it's priced to perfection. In your opinion, what are Hyundai's competitive strengths in the market and how do you think this could impact its future outlook? What verticals of the business should investors be betting on if you want to go out and buy into the Hyundai story?
So I think, as I said, the strength is definitely perceived, I would say, Hyundai as a global company versus Maruti, which has its own shortcomings, being India is the major market. So that's the perceived options. Having said that, there is a hope that they should be able to get a better value growth as industry volume growth is slowing down. But if I had to compare the last 10, 15 years, their performance, their value growth is either on par with Maruti or sometimes even inferior to Maruti. So hence, we need to see how they will pan out with the new products as they participate in some of the new segments which open up, which is basically either EVs, where they have a better success rate compared to any of the Indian peers or global peers into the global markets like Europe and US, whether the similar products can fit in or whether they can be brought in with a better tweak to the Indian market conditions at the right time so that they can ride it. Similarly, in case of hybrids, where the parent is now talking about looking for expanding their investment into hybrids as also is the case for some policy tailwind which is emerging in the Indian markets. So in that context, the agility of management to bring these new products and improve its hit rate is essential to look forward as a strength.